Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Okay, let's take a look at Aussie Kiwi and see where we can identify the trend. On the monthly, price has been ranging in between this demand and supply zone up here, and price has touched this area of supply, and now it's looking like it could go back down lower. On the weekly, price did not touch the area of supply on the weekly, but it did touch the higher time frame supply zone, which is that dotted line I drew there. So we're expecting a move to the downside, or it could come back up and actually touch the zone and then go back down. But right now, then this area of demand, draw right here. This area of demand is not very strong because when you have a higher time frame supply going against the lower time frame demand, this is most likely not going to hold. So I'm not going to draw this in, delete it. And we're expecting price to drop. If not that much, it's going to go back up to this weekly area of supply and then go back down, because that's what our higher time frame is telling us to do, because it's been tested only once, but we're expecting it to hold, unless if it's a zone that's been tested multiple times, we can expect it to get broken, but it's only been tested once, and it's the highest area of supply on our time frames, so it's going to hold for a while. So we could look to short, but our middle time frame and lower time frame are telling us to go long, but right now it's too high in the curve to be buying, so we can look for short opportunities. So there was some short opportunities that was taken. So this area was supply, and price went into it and it dropped because there's these areas of supply, but the main area of supply was the one I just told you about, was this higher time frame one. So this higher time frame one is going to be a lot lower than like all these smaller time frames, because it's a bigger chart and a longer time frame chart. So this area, this huge one, is going to be a lot lower on the lower time frames. For example, this area of supply on the monthly is located a little bit lower because it's bigger. It's locating lower than the actual weekly supply. So the weekly supply is inside the monthly's area of supply, but the monthly area of supply is going to get the first reaction, if you know what I mean, if that makes any sense. So it didn't hit the weekly area of supply, but it hit the monthly area of supply, and it's reacting. And it could go all the way down, or it could go back into this weekly area of supply and then drop down. So that's what it kind of did on the lower time frame, the daily. So it created this area of supply, losing steam to the upside, and now it's going down. So it can go down or it can go back up, but if it goes back up here into the area, to the weekly area of supply, then we're looking to short again. But if it goes down, then we're looking to short on the way down. Okay, so I hope you guys found this video helpful. If you did, please give it a thumbs up, like it, and subscribe, and that helps me produce more videos in the future. Thanks for watching, guys. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.